once there are huge participants, almost 1,000 plus. Today, comparatively a bit less. Maybe they are joining.
No, actually, I'm sorry because what happened. This meeting today morning meeting came and I could not avoid it because the holders and all the EDs was involved. And it's a project which I'm heading it, so I cannot give the project to anybody else. And also, the meeting did not complete in 1 hour time, and it's happened so it started at 10 o'clock, it went till 12:30.
I see. Okay.
So that's why no point in keeping you. Yeah. So therefore, I said let's better be rescheduled it.
Sahil sir, before starting, could you please raise your volume a little bit? It's not audible properly.
Is it not audible properly? Am I audible or not?
Yes, now it is better.
Now it's okay. Yeah.
So that means I have to speak in a higher pitch. Yeah, pitch basically. Okay. Am I audible properly now? Can you confirm to me?
Yes, sir. Now it is better, sir.
It's better. That means I have to talk on a high pitch. Okay.
Yes.
Okay. Yeah. So I'm ready.
Yeah. Good afternoon, everyone. Respected Mr. Sahil Malik ji, CGM SEBI, and Director NCFE, all our trainer friends, and trainers from the financial literacy centers from all over the country. Also, thanks for overwhelming participation in our previous 2 days program. It's my pleasure and privilege to welcome all of you to today's session of Financial Literacy Week 2024 organized by NCFE with the support of all financial sector regulators. Today, Mr. Sahil Malik ji, CGM SEBI, would be taking the session on Invest Wisely, Building a Financially Smart Future. I am immensely thankful to Mr. Sahil for giving his kind consent and sparing his valuable time and for agreeing to handle this session. I would be failing in my duty if I don't mention his enthusiasm and insistence for today's session so that he would get a chance to interact with you all and share his knowledge and experience and also share his expectations. Mr. Sahil has profound experience of more than 2 decades in SEBI and is presently heading the Investor Awareness and Education Department as the Chief General Manager. I would request all of you to effectively participate and get the best out of today's session. As I said before on the inauguration day, there is a compelling need for significant acceleration in financial literacy to achieve the stated goals at a sustainable level. Financially literate individuals can have effective use of financial products and services. In fact, in recent years, it is increasingly being recognized that nationwide financial literacy can be achieved only through a multi-stakeholder approach, wherein different stakeholders, namely government, financial sector regulators, financial service providers, civil society, academia, both in public and private sector, have a role to play. Before the start of the session, I am prompted to quote Mr. Morgan Housel, a famous author of books like Psychology of Money, that being a successful investor is about mastering the art of not losing the money. In fact, the best investors are not the ones with the highest IQ. They are the ones who have a process and the discipline to stick to it. And the most important one, what he says, growth is driven by compounding, which is always takes time. And he always says that save like a pessimist and invest like an optimist. I won't take much time. I won't stand between you and Mr. Sahil ji and wish you all a very engaging session. Thank you, and over to you, Sahil sir.
Thank you, CEO sir, Jena sir, and let me congratulate him. We have a new CEO with a lot of energy. And one good thing I liked about Mr. Jena in the first meeting is the enthusiasm which he has to accept the ideas That's very encouraging. I found Mr. Jana and you that, of course, we'll do a lot of good work. And yes, there was some lull period in NCFE, and I'm sure we'll do a lot of good things in coming years. To all the trainers which are joined right now, who will also part of NCFE, otherwise also. So good afternoon to everybody. And my sincere apologies for rescheduling this program, because I know it was at my behest, this session has been rescheduled. I apologize for that. I understand we have 1 hour time to discuss today. So what I am proposing this way, Mr. Jaina, if I keep it my presentation for 30 minutes or say 40 minutes, and the rest I keep 20 minutes for the Q&A session, is okay?
Yeah, it can be 50 and 10 because they are just writing it like that.
Okay, perfectly fine.
Yeah.
The good part, here I go. We have, I know you all are trainers, anyway, you know the systems, you are aware of financial markets for sure. Let me start with few statistics to give a feel to you about what is the market is all about and where are we operating, in which, what is our universe in which we are operating, and what is, how much we can enhance our reach. So let me share some numbers to you. This is my current GDP of India, that is around 6.5. We are one of the fastest growing economy in the world, in the emerging space for sure. And if you see our current GDP numbers are also visible to you on your screen. Nifty 50, the benchmark index of NSE, has surpassed 21,000, and BSE Sensex has surpassed almost 71,000. Of course, I think it's around 72,000 right now. And if you can see the turnover on cash market vis-a-vis fund segment is completely, in fact, with great proud, we can say that NSE, the National Stock Exchange of India, is the largest stock exchange in the world where the maximum of trades happen in F&O segments globally. So being we as an emerging market, still mine and stock exchange has a privilege to have the largest stock exchange, where the maximum of trades concludes in F&O segment. This is my market cap. If you see my market capitalization as good as my GDP, that means if the value of all my market securities which are currently National Stock Exchange adds up, they adds up equal to my GDP. That means this big is my market. That means if I sell all the securities of which are listed currently as per the current valuation, they would fetch as good as the entire GDP figure of the country. Isn't it? It's a very encouraging number. And now let's talk about various financial products or various financial systems available in the market. So we have banks by which you can open a bank account. So the population of 140 crores, we have bank accounts of almost 150 crore. That means it so happens that some people are having more than one account, therefore it's more than a population. And of course, I'm sure many people who are youngsters, they don't have a bank account. Therefore, assuming that it is that people having more than one bank account, therefore it is 150 crore. That's in them. However, when we compare this bank account with our existing demat account and also our mutual fund folios, it's not that encouraging. So our mutual fund folios, without doing deduplication, it's about 16 crores. That means there's possibility that there are more than one. There's possibility that people are holding more than one demat account and also more than one MF folio. So this universe of people having bank account, but they are not having demat account, or they are not having a mutual fund folio. One important element I want to bring to your notice is that around 50 crore people have linked their PAN with Aadhaar. Based on the government's insistence that people have compulsorily has to link their PAN with Aadhaar, and that means people are available in the system who have PAN number, which is prerequisite to trade in our market. Basically, the one who has PAN number can only trade in our market. Of course, except Sikkim, where they are exempted from the PAN requirement. So we have the total universe available before us is 50 crore. However, we can see that around 16 crores are in MF folios and around 13.5 demat accounts are there in demat space. So a huge gap is there between people who are having a PAN number vis-a-vis having a bank account, or vis-a-vis our mutual fund folio or a demat account. So this is the role of a trainer like you who has to do a lot of awareness, create awareness about our markets. You have to speak the positives of our market. You have to popularize the market, and you have to speak with data and how this market is better than, and how this market is going to help people in wealth creation, and so that they can fulfill their dreams, they can plan their retirement, they can plan their financial goals. And this market can definitely help each one of us to fulfill our dreams, because we all work to achieve one or other dreams, either buying a house or going for vacation or buying a car or having a retirement purpose. So this market can come very handy to all of us. So this message, all of you to go and pass on to the people around in the area where you operate. So this figure can be very handy to you. So please use this figure in your presentations, in your communication to all the people with whom you interact. Now, this is a very important statement made by Mr. Albert Einstein, that compounding is the eighth wonder of the world. And the one who understands gains, and the one who don't, he is the one who loses. Actually, he pays for the one who gains, basically. So those who understand they want to do, they start putting money early and they keep investing at frequent intervals, and the money keeps compounding on an annual basis. And those who don't, or those who start late, they lose big time. PPT, not visual. Is PPT visible or not?
Yes, sir. PPT is visible. Only the vote still a little bit lower side. In from participants also, we are getting comments that volume is a bit low.
Okay, volume is a bit low. Bring it more closer to me. Okay. Now, if we look at this, we are here showing you the different asset classes here, how they performed in last 30 years. So let's talk. The fixed deposits have given return of 7.5% almost. PPF 8.76, silver 11%, then gold around 11%. However, the BSE Sensex, the sensitive index of Bombay Stock Exchange, has given almost 16% on a CAGR basis. Now, I hope you understand what is CAGR basis. That means compounded annual growth rate. That means on year basis, they have given a constant. I mean, on a CAGR basis, they given a return of 16%. Now, there's no other asset class which is coming closer to the equity market performance here, be it gold, or be it silver, or be it PPF, or be it fixed deposits. Isn't it a good reason for us to go gung-ho about this market, or to very happy about it? This how this market is performed. In over 30 years, it has been giving return of 16% on a CAGR basis. That way, it could be more than 16% in some years. Of course, there were some difficult periods also, but on a CAGR basis, that means in a compounded annual growth is given return of 16%. And examples are in front of you, data is in front of you. Go and tell everybody that yes, this market is suitable, this market is giving good returns. Please come invest here. Here also I request members to go and propagate this market so that people don't fall prey of unregistered schemes which are happening in various eastern part of the country, wherein people do invest in unregistered schemes, or people fall prey of multi-layer marketing companies. They put money there and the companies disappear by night. But the second figure to show how the by Sensex is on 31st January was 71,752. So let me give you an example of how I see the Sensex performance. So let me give my own career growth. I joined SEBI in February 2002. That time the BSE Sensex was around 3,000. Today the BSE Sensex is around 72,000. That means in 22 years, this market has grown, multiplied by at least 24 times. So 3,000 into 24 comes to 72,000. And in the span of 22 years, the Sensex has given a return of 24 times. I'm just giving the right example, not going here and there. This is a fact that in a span of 22 years, the BSE Sensex has performed 24 times. Moving on, this is how growth is again repetition. Again, repeating how the is performed last 1 year. And this table shows you about how a market has performed with a lot of difficulty, whenever difficulty has faced or any major event happened in a country, how this market has evolved. And very interesting fact I want to share with you that during COVID, the whole world was closed or was in a terrible situation. This market has shown resilient and it has performed extremely well. In fact, let me also congratulate people like you who have created awareness on the ground level, and people have came forward and opened a lot of demat account and several mutual portfolios have been opened. In fact, in this last 3 years, the number of demat accounts have been tripled, and similar the case with mutual portfolios also. I was part of mutual fund department. That time I remember the total assets under management of mutual fund department was around 10 lakh crore. And today, in span of around 13 years later, it's about 52 lakh crores of AUM of mutual fund in India. This shows that people in India have accepted the fact that people who do not understand or who do not decide which stock to buy directly. So therefore, they are putting reliance on mutual fund managers. The fund managers have proven their mettle by giving constant returns in the schemes. Every month, a mutual fund receives around 17,000 crores every month. They get money as SIP. Systematic investment plan money comes to mutual fund industry every month. 70,000 crores they get every month as SIP money. That itself shows the comfort or trust which this industry has garnered from Indian investors. And that's a fact globally also. If we see the Western countries also, where majority of the investors start investing from the day of their first job. In fact, the day they are forced to save from the day one itself, they join services. Unlike in India, where we don't have established organized setup where people compulsorily have to start investing for their retirement, because we don't have such a scheme concept as very prevalent in other countries. Yes, the need of the hour is that yes, we should go out to people, ask them to start investing from day one itself, and mutual fund is the best platform to start with. So this is the mandate of SEBI. If we see the SEBI has triangular mandate, I will develop the market. That means I have to see to it that markets are developed. I have to also ensure that I am regulating the market properly. And I'm also very mindful of the fact that by doing development of the market and regulating the market, I should not forget the fact that my major objective or my major mandate is to protect the interests of investors. That's my foremost mandate. So in case SEBI has to choose which is the foremost mandate, I would say the protection of interest of investors is my first mandate. This is one illustration before you, which clearly says if you start investing at this, so assume you start doing SIP for 10 years and you pay this for the amount monthly SIP of 57,000 odd rupees, and the growth is 7%, you will get it become 1 crore in 10 years, right? It's just an example of how the performance is done in the insurance space. One more example is before you is this, how ELSS. So ELSS is a scheme launched by mutual funds, which is tax efficient. That means under 80C, the total limit is 1.5 lakh rupees. So in case if you invest that 1.5 lakh rupees in any of the mutual fund schemes, which are ELSS, that is equity linked savings scheme, so you can claim that money as a tax exempt. So government will not charge any tax on that money, and that time 1.5 rupees will get exempted from any income tax. And importantly, the important fact is these schemes have done very well because these schemes are locked in for 3 years, and fund managers get clear 3 years to take a long call, and they can deploy the strategy which can yield better results than any normal open-ended fund. Now, this type of schemes help fund managers to decide their sector which they want to follow or industry which they want to follow. So because it always says the one who stay longer always gets major benefit. Therefore, an example in front of you, if somebody would have invested in PPF, suppose he invested, I have two options. One is investing in PPF, one is investing in ELSS scheme. And in 30 years time, if it says the value will become 1.55 crore, the return is 7.1%, and however, return of ELSS scheme is 1.39%. That means in all possibility, the ELSS scheme will outperform the return of PPF. Because PPF invests largely in the government securities, which are fixed income securities, and then the yield is very much restricted based on the various factors. So right now it is around 6%, 6 to 7%. So which remain constant all the while, unless we have very different regime altogether, which is not the case in near future. So ELSS schemes takes a long call, as I told you, they invest in companies which have a brighter future in coming years, and therefore the fund managers invest in these schemes, and they have been performing very well and have really helped investors to save tax also, and they are also able to do capital appreciation also by these schemes. So what's the right age one should invest, and what's the right age one should start investing? The people say yes, I once I become 30, 40 or 50, but so there is, I would say the one should start investing the day one start having disposable income in his hand, hand. So one should not wait that I'll start investing once I have family or once I have more money. So don't fall prey of that. Once you have more money, then only you will invest. You can start investing on any day when you have a income of your own. Do not wait for any special event that yes, I'll start investing when I get married. I'll start investing when I have children. Answer is no. You can start investing the day one you join your work and you will get your first salary, and make it as a routine. Make it as a routine that yes, every month a portion of your income has to compulsorily be invested. It always says that income minus expenditure is saving. That's not right. Actually, all the big investors says the income minus investment should be your expenses. That means you should first allocate a portion of your income towards investment, and whatever is left over should be your expenditure. Because it's always seen that whatever we keep on getting more and more salaries. So what we do, we keep on increasing our expenditure also. But good investors suggest that whenever you have more income, you increase your investment rather than increasing your expenditures. So those who follow this principle, they have been proven very good investors, and they have got a lot of returns in return. So these are some, I would say, misunderstanding among investors has that if I start early, compounding does not help, right? So I say if you as early as you start, it is going to help you big way. So start investing from day one. You start earning. Many people don't become part of my system because they feel the market's too volatile, right? Let me share one anecdote here. People who buy a share, what they do? They buy a share on day one, and this from day 2 or day 3 onward, they start tracking the share price. Suppose they bought a share rupees 100, next day they want it to become 101, if not 102, and then every month their expectation keep on going up. Tell me which asset class whichever you buy, do you track on a daily basis? The answer is no. You don't track your assets on a daily basis. So why in this space? There's no requirement for yours to track your investment on a daily basis. Yes, this market is volatile, agree, no doubt about it. But don't be afraid of the fact that this market is volatile. It's just that the market is very transparent. Therefore, you get to know what's happening in the company's performance or what's happening in the price of the company. Therefore, it appears to be volatile. It is volatile, no doubt about it. But don't be just afraid of this. If just because it's volatile, I will not become party to it. I would say become a party to it and enjoy this ride. Do not put your all assets in one place, as I told you. So there's a proverb in English, don't put your all eggs in one basket, right? So here I would like to suggest to all of you, please go and tell the world at large, please diversify. So when I say diversify means please buy assets of different variety. So you can buy debt, you can buy equity, you can buy gold, you can buy other things. But do not put your entire corpus in one place. So this is, I just want to show how the different people at different age bracket have. So when you're 20s, a lot of money comes even in your bank account. You hardly buy a small portion in banks, in stocks, and you have no liabilities as such. But once you become 30s, what happens? You buy home, you buy stocks in a small amount, and you have put some small money in bank deposits, but you have liability of home loan. When you become in 40s, what do you do it? Your home, your deposits, you start increasing your component of investments. But at the same time, you have a home loan, also your addition liability of education loan of your children. And as you grow older, what happens? Your home loan, your deposits, your investment amount is increasing as you growing older, but you have no liability. So can we think of this phase that when we are in 20 itself, when we start, can we earmark a higher portion of our savings into investments? I hope all of you understand the difference between investments and savings, right? Moving on, these are different solutions available in mutual fund space, which one can think of investing in this various type of products. The easiest and simplest product available in mutual fund space is index funds, or I would say ETFs. Now, what's index fund? Index fund is simple mutual fund schemes which simply track either benchmark index of NSE or the benchmark index of BSE. So suppose if you're buying a Nifty index fund, what would the fund manager will do? The fund manager will simply buy the entire constituents of Nifty. The Nifty constituted of 50 stocks. The fund manager will buy the 50 stocks in the same constitution of in same proportion as they are available in the Nifty. So what will happen? Your investment will grow as the Nifty will grow, right? And just now, as I told you, my own experience, and BSE Sensex has grown 24 times in 22 years. So had you invested 100 rupees in the 2002, it would have become now 2400 by this time. So that is simplest. And index funds are the cheapest funds available in the market. They're as cheap as 6 basis points as fee charged by the fund manager, some of the fund managers. So I would say if you invest 100 rupees in index fund, 99.994 money will be invested in the portfolio, and only 6 basis points will go to the fund manager as a fee. Then we have large cap funds. These are the funds which invest largely in the companies which are large or blue chip companies. Then we have mid-cap fund, which track the market capitalization is on a mid size, not very high, not very low. Then we have multi-cap fund, which is like large, small, medium, all they have put together. Then there are small cap funds, the companies which are very small at this moment, but they have a huge potential in coming years. Therefore, the mutual funds have also a scheme for different type of funds for different type needs of people. So let me explain to you here. Of course, we have examples also here. I'll come to you. Now, coming back to equity funds. So within equity, we have normal equity funds. We have aggressive hybrid. Now, what's hybrid? Hybrid means a fund which has a component of equity, also a component of debt, or it could be other asset classes also. That means which are the fund which has the element of different asset classes are called hybrid funds. Then we have debt funds. So the point I'm trying to tell you here that for different needs of different people, mutual funds have product for everybody. Be it if you are aggressive fund, if you are an aggressive investor, what you can do, you can simply go to equity to buy equity. If you are conservative fund, if you're a conservative investor, you don't want to expose yourself to a equity market, what you can do it, you can simply buy a debt fund, and we have debt funds with a different duration tracking also. So we have overnight fund also, we have liquid fund which track as low as 90 days peak duration. We have a very short-term duration fund, we have short-term fund, we have medium-term fund, we have long-term fund. So based on your requirement, based on your need, what you can choose a fund in which you want to invest. If you have your horizon of investment is 3 years, you can go for medium-term fund, right? So now let me compare space in mutual fund versus the space in banking sector. So in bank, you have saving account or current account. So we have compared it as liquid fund. So liquid fund tracks any product or any paper which has a maturity less than 90 days. So they are very liquid. You can buy today and you can sell yesterday also, next day also. That is as liquid as. And let me tell you one thing, the investment mutual fund is very liquid. If you want to sell your redemption, if you want to redeem your investment, you'll get your money within 2 days. They are very liquid. Then the way you have recurring deposits in banks. So similarly, we have SIPs in mutual fund. Every month you can put some money as per your ability. What happens? We have seen the performance in banking sector. We also have seen how the SIP has performed different funds. So of course, if you see the SIPs over a period of time has done very good perform compared with any of its peers. Then you have fixed deposits. So mutual funds have the comparative of FMPs called fixed maturity plans they have. Then there's a PPF. So we have ELSN schemes which can come in place handy instead of PPF. Now these are some strategy I would like to share with you. What are the basic why one should go for passive investing? Why not let me explain you what is passive investing, what is it? Active investing. So when you buying a stock by your own of your choice, suppose today you want to buy a share of Reliance. Suppose you say I want to buy a Wipro. Then you say no, I want to buy a Sterlite share. Then you say no, I want to buy a share of Zomato. These are conscious call by you when you're buying a specific stock. This is called active investing. You are actively engaged in selecting the stock. However, when you are not actively participating in stock selection, you are just passing this responsibility to somebody else. That's a fund manager. That is called passive investing. So suppose if you say I want to buy index fund. So index fund is an example of passive investing. That means you do not take any call about what stock to be purchased. It's somebody else who is taking on your decision on your behalf. That's called passive investing. It's very easy to monitor all the mutual fund investment. You can simply track your mutual fund. There are a lot of websites available on the system, like Value Research, MF Central, moneycontrol.com, or every website. You can go and check performance of your scheme per se. These are very cheap compared to our normal active funds. And I would say the normally active funds charge fee in the range of 2% plus in equity space. However, this index funds or the passive funds charge very low fees, as low as 6 basis points. I mentioned just now. And it has been seen globally. If you see, largely people invest in passive funds rather than investing in active funds directly. So this is a global phenomenon. It's not with something unique I'm talking. It's a globally people have understood the concept of passive investing is preferred choice of investors vis-a-vis active investment. So this is, look at this picture. What does it denotes? It denotes the one who are learning, they will be actively engaged in stock selection. But those who have mastered the art of stock selection, they just sit quietly and sit for long and just allow the investment to grow by its own. They don't do they don't churn a portfolio on a daily basis or on a frequently basis. They just select a stock, take a conscious periodic calls at a periodic intervals, and then they decide whether they should stay in the stock or not. Whereas those who are newly entered in the market, they become very euphoric. They take very lot of interest in trading on a daily basis. And therefore, they are very actively engaged in stock selection by themselves. So if you see what should be your criteria of whether should we go for long term or should we go for short term, I would suggest always be a long term investors, because those who stay long term invested are the one who make excellent profit. And data has proven this statement a lot, that those who stay longer are the one who get maximum profits. No, this is some, I would say, these are some advice from my side, how you should treat your investments. So what happens, I have been watching this industry in the last 22 years. I have seen many people who have performed very well in the market, but next day they are out of the streets. They lost big time. And there are many people in the system who have gained initially a good amount of money, but subsequently they lost money. In fact, SEBI has come out with a report wherein we ourselves has said that in F&O trades, in futures and options, 89% of people, retail investors, I would say retail investors, who are investing in futures and options are the one who make losses. It's a big statement from our side. We are criticizing our own not criticizing, I would say we are just giving us alert to people that those who don't understand the dynamics of the market, please do not buy those products. The people who are making profit in futures and options, they are the ones who are not individuals, who are not retail. Actually, corporates are making profit. Retailers are losing money. And do not find fault in your stock selection, or do not discuss people who are not aware of it. So therefore, if you see, we have been time and again telling all the investors to please take informed decisions. We have investment advisors in the system. The species called investment advisors. If you don't understand, please do not go and take their help. We have around 1,400 investment advisors in the ecosystem. Go and take their help. They'll be happy to help you. Of course, they'll charge a fees. The way we go to any professionals and we pay a fees to get their advice. So we have investment advisors who advise you to invest on different asset classes. If you want to buy specific stocks, you can go to research analyst and buy the research report, and based on that you can buy stock. We also have a concept called portfolio managers. If in case you have a particular, if your money of 150 lakh or more, and you want a customized service from them, you can go to portfolio managers who will be happily managing your portfolio. And they'll get of course at the fee to charge you, but of course they give good returns to you also. Allow your crop to grow. Do not be very hyperactive, or don't be very persistent about performance. Allow the stock to perform in the long run. Keep informed about how the company is performing. So do not just invest in one go and forget about it. Please do a periodic check about investments. It's very important. And be aware how the company is performing. Thankfully, the industry is so robust, and a lot of information available in the system now that one can very easily get information about the various type of companies, how companies performing. That's very important. So therefore, I would say that please be informed, read a lot, talk to people. They are professionals in the system who are ready to help you. Do not just go and advise of people. And in fact, we have a lot of people who come in the social media these days that talk about various services they are ready to provide to you without free of cost. Of course, they do not do that. Take professional help, and don't fall prey of some unheard type of returns. If somebody says, I will give you return of 5 times in a year, do not go by this promises, because it's not possible. If in case you see, we have been time and again telling all the investors to don't fall prey of such assured return schemes because there's nothing called assured return. There's nothing called risk-free investment. Every investment carries some amount of risk. If you see, the SEBI's products are only products in the world, in a country which says, please read offer documents carefully before investing. Or we also give a disclaimer that please be mindful this involves some risk. So we want investors to be aware of what risk they should be aware of. And we have been issuing a lot of press releases also. And we urge you, all of you also to read our press releases and inform investors about what are the wrong practices happening in the market. And they should not be carried away by various different greed, and people will entice you by giving some assured returns or some fake stories about double profit or 3-time profit, whatever. It's not possible, I'm telling you, because the country is doing this growth of normal banks giving 7% return. How somebody can promise 35% return? Not possible. Simply say no. I don't know. I don't want to come forward, and don't fall prey of this all of these things. This is just a statement. I want you to read about it. Moving on. So coming back to various Indian investors. Let me repeat. Let me say the Indian investors are the best people who are the best savers. Indians are the best savers. They save almost 30% and above. They save normally. A normal Indian saves 30% very easily. However, this saving does not convert into a saving investments. So what they do, either money lies in the bank account or money lies at their home, or they buy some property or they buy some gold. We are one of the largest consumers of the gold globally, and we can import majority of gold from abroad. The Indian women are having a lot of fetish or fancy about gold. So I'm saying there's a new way of buying gold. So of course, one is government saving sovereign bond fund, which has been launched by government. You can buy gold bonds. So along with the capital appreciation, you also get 2.5% of interest annually. Plus, you can also buy gold ETF. The disadvantage of bond is that it's not liquid. However, if you buy a gold ETF, it's very much liquid like any other stock. So if you buy a gold ETF, you buy today, you can sell next day. And these are traded in the stock exchange. You can buy through a stock broker. So the value of gold ETF is derived by the market forces. And in case you find that you have already reached your investment horizon is met or your investment goal is achieved, you can always sell this product and move out next day itself. Then we also have seen Indians have a lot of fancy for buying property, a lot of real estate money, a lot of money goes in real estate. And we have seen a lot of tier 2, 3 cities have still a lot of interest is still there, and real estate is still booming there big time. So SEBI has came up with a concept called real estate investment trust. Now, what does real estate investment trust do? What they do is they simply buy a ready-to-move property, commercial property, I would say. So they acquire a commercial property which is already completed, and then they let it out, and whatever rental they receive, they distribute among all its shareholders. The REITs are listed on a stock exchange. So you have two benefits. One, getting a periodic income distributed to you by way of rental received from the property. Plus, you also get benefit of capital appreciation of the property in which you have invested, because that will reflect in your pricing of the REIT in the stocks on the stock exchange. Similarly, we have investment trust also for various infrastructure projects like bridges, airports, flyovers, dams, highways. A lot of agencies are procuring money from the investors, and when they build it, they dispose of and they transfer this asset to a special purpose vehicle, and based on the receivables they have, they distribute receivables to the investors, and that's how investors make money out of it. So in case you want to buy or be part of this ecosystem of buying gold, and also part to buy, you want to have exposure in real estate, please do it. I'm saying no, don't do it, but come and buy a product which is closely regulated by us, and which is very much liquid and safe. So this is one case where recently SEBI has passed an order against a gentleman called Babov Chart, and he's been the one who's been advising a lot of people on Telegram channel and WhatsApp channel. And we realized that he's doing a lot of hanky-panky things. And what we have ordered him, we have asked him to disgorge $172 million rupees back to us. And we asked him to stay away from the market and don't give any advice. So please be aware that whenever you take any advice from any investment advisor, check whether he's registered with SEBI or not. And you see to it that whatever he's promised you, do not fall prey of any exponential growth which he can promise to you. And be informed, be aware, and be educated about financial rights of yours. Always be mindful that you have to build an emergency fund corpus to address your emergency needs. Diversify your portfolio. That means don't put your entire assets in one place. You can diversify in equity, debt, gold, REITs, index, PPF, bank, insurance. All this you can diversify so that you can get benefit of everything. And one asset class non-performance does not deter your complete performance altogether. And as I said, you please remain disciplined towards investment. That means you please invest periodically every month basis. And from your income, first decide how much you want to invest. That means income minus investment should be your expenditure. You should only spend whatever left out after your investments. And be mindful that you do not pick up any stock or mutual fund scheme just by looking at the past performance of it, because it does not guarantee that whatever is performed previously it should also perform in the future also. So be aware of the fact this and start investing now itself, and start investing as low as possible. Don't think that I have lakhs of rupees or 1,000 rupees only I can start investing. You can start with as low as 100 rupees also now in mutual fund space. And if you advise to the investors from our side, I would say do not overtrade. So I've seen some people do just make their livelihood only by trading. So be mindful of the risk associated with this. Be mindful how much you can digest your losses. That's very important for you to understand. Be an investor, I would say, not a trader, because those who remain invested for longer always gain more. Please do your due diligence before buying any stock or a mutual fund scheme. That will ensure that you don't end up buying a wrong product. You also be ensured that the product which you are buying is regulated and there is a regulator behind it. Do not fall prey of any product like cryptocurrency or Bitcoin, etc., or non-fungible tokens and all those things. These are not regulated products. I would say that these will not help you in big way. So stay away from all these products, and do not borrow for investments. It's a very important principle of investing is do not borrow to invest. Only invest money which is yours. Because in case you lose money in markets, what will happen? You have to bear two losses. One, you suffered losses with the market, and secondly, you have to pay the cost of borrowing also. So please do not borrow to invest. See to it, be aware, go access various website of regulators, RBI, SEBI, IRD, or PFRDA, or the MCA. These are regulators are standing here to help you. Come to us, we'll be happy to help you. And keep your long-term goal in mind that this is my objective. I want to stay for long and do not have a short-term vision. We have long-term vision about investments altogether. This video I want to play to make you aware.
What is this multi-bagger stock? Multi-bagger stock वो फिल्म है जिसे पहले तो कोई भाव नहीं देता, but eventually it will break all box office records. धन धना धन पैसा, producer की तो सोना चांदी हीरे मोती, maybe even an Oscar. Multi-bagger means alti returns. Madam, फिर तो अगला Oscar हम ही बनाएंगे. I've seen one multi-bagger stock video. Triple return. Oh my India. Oscar मूवी नहीं, लॉस्कर मूवी बनाओगे तुम, लॉस्कर. मल्टी बैगर के चक्कर में जल्दी बैगर बन जाओगे. फर्स्ट टाइम स्कैम है ये. अब कहानी कुछ इस तरह है, यानी कि बाय दिस स्टॉक this stuff or SMSs, social media, videos, misleading advertisements to artificially create demand. And thanks to Bakra investors like you, the price will go up. Now you are thinking the price will go up further, but it won't, because I will sell my entire stock of this Kajra stock. And then multi-bagger तेरे प्यार में लुट गए हम बाजार में. Don't be greedy. यहाँ 2 minutes बनते हैं. And please take financial advice only from registered financial advisors and be well informed of the investment. No investment without proper information. सोच कर, समझ कर, invest कर.
समझ कर, invest कर. NSFE द्वारा निवेश
See, स्टॉक मार्केट में इन्वेस्ट करना योगासन करने जैसा है. Very good for you. लेकिन किसी भी आसन को करने से पहले इसे ठीक से समझना जरूरी है. Otherwise you will end up in सत्यानासन. कौन सा आसन करके पछता रही हो? Futures and options का. Futures and options, very advanced आसन. क्या पैसा? How did you know? Ji, as per the SEBI report, futures and options में only 10% paid us net profit. बाकी 90% का तो loss ही loss. Very good. Very good that you have also read the SEBI report on futures and options trading. Correct. Only 10% chances there of profit in FN. Oh my God. I know now, but regulations cannot be. You have seen the disclosure form. It's a very risky asset class, but you have attempted trading on it. Yes. See, your broker has a show of vehicles. For your money, cycle है, scooter है, sports car है, some very advanced rockets. Rocket चलाना, rocket है, FNO चलाना नहीं आता, इसीलिए rocket नहीं स्कूल गया. You are blaming show. क्या है? वाले से पहले दिमाग लगाया होगा, तो आज वेंटिलेटर लगाना नहीं. सोच कर, इन्वेस्ट.
And just before I conclude, these are a few time getting wealth. What you need: discipline, time, and money. These are three important elements to create wealth. So keep doing it. And with this, I end my presentation. I'm happy to take questions. Yeah.
Thank you, sir. Now, participants, if you have any queries, we can post that on the chat box. So there is a query from Gaudi Naik.
Okay.
How looking after household in rural India, earning daily wages, get into saving and investing, make her household financial resilient? Your thought, suggestion on this?
Yeah. So as I told you, do not wait that I'm a daily wage earner, so I don't have money to invest. If you see, let me give you an example of there's some company in the past, they used to come to all the daily wage earner and pick up 10 rupees on daily basis from these people, and that's how they used to create the wealth for them. So now mutual fund also has started a concept of micro SIP, that is 100 rupees. So that means you can start investing at 100 rupees also on daily basis. If you have, or you can do it monthly basis also. So mutual funds purchase is very easy. You can buy through internet. You can buy through various. In fact, a lot of discussion happening at SEBI and also whether we can use the entire network of post offices and also the rural banks to send mutual funds from these networks. Hopefully, these people can go to these places and buy mutual fund from there. Otherwise, they can also go to mutual fund offices in different cities, and they can buy from there. So I would suggest people who are working in rural areas also, they have an option of investing in various asset classes available in our market. And a lot of contents are also available in vernacular languages also. If they don't understand English, they can ask content in the language which they prefer. So of course, yes, they can invest there as well.
Thank you, sir. Another query from Mr. Arun Ameta is asking, what is ESG mutual fund? Could you please give example of any fund in market?
Right. So this is a new concept being accepted globally. That ESG stands for Environment, Social and Governance Funds. So these are the company, the funds which invest in companies which are having dominance, who takes care of these three elements, that is environment, social, and governance. That means there are mutual funds, especially launched schemes, which are called ESG funds. And we all should be mindful of these three elements because we have to, it's a payback time from all of us. Therefore, it's very pertinent for all of us to be mindful of what is required to be done for the environment, to society in which I operate, and also I should also be see to it that my operations have a right mix of governance. People who are operating are being held accountable, and there's all transparency available in the system. So companies which demonstrate these elements and mutual funds invest in such companies, those are called ESG funds.
Thank you, sir.
Somebody is asking what is the difference between NSE and BSE. NSE and BSE are two different stock exchange in the country. And BSE Sensex constitutes 30 companies and Nifty constitutes 50 companies. They are, as both are comparable. If you want to buy a share from a stock exchange, you have to reach out to them through a stockbroker. These are stock exchange of the country. How to get patients with targets? Okay, there's a question from Mr. Arun Ameta that how do we inculcate patience? So, well, I would say this is a big task before all of us. And yes, I would say it's a difficult task, but it's not a difficult task. If you see, when you buy a property, we don't expect the price of the property to go next day or next month or next 1 year, right? We wait for some time. But when you buy a gold, you don't you don't check the value of the gold on a daily basis, right? So why is the case in this industry? This is the normal. I would say there's a lot of misunderstanding in the people around the country that when I buy a stock, I should keep tracking it on a daily basis. And if it doesn't perform in a short span of time, I'll sell off and move out. Don't do that. When you buy a stock based on advice of a people or your own research, stay invested for long. And I would say you start from large cap stocks, which have done very well in the country for so many years, or you can buy stocks which you yourself uses, right? So you can take, based on that, you can take decision. And I would say, yes, keep giving examples to people about how the long-term investing has worked and made a fortune with people who have invested for long-term, vis-a-vis people who stayed invested for short-term, how they were not benefited because of short-term investing. Yeah.
So there is a long question from Dr. Shika Gupta. So I'll just unmute her so that she can ask directly.
Yeah.
Shika madam, you can speak now.
Am I audible, sir?
Yes, you are.
Yeah, sir, actually being a SEBI trainer, we are being given a task to go for the corporate training as well. But majority of the time we get into the issue like the employees, there is a mixed breed, the employee set over there. So there are certain senior employees along with juniors, and they generally most of the time at the time of feedback, they ask us like they already been into trading, so they didn't find the session fruitful, because our sessions structured is basically for the initial investors who want to start their journey, not for those who are already been into trading. So I found myself sometimes being restrict on these our curriculum requirement of the PPT. So that was one of the issue that I face. So how to help them so that everyone in the class of the session would get satisfied. So this is somewhere most of the time I get this kind of feedback from some of the participants. So how to make everyone just satisfied with the IAP session that we hold, especially in the corporate sector.
Yes, ma'am. In fact, I would say this is very good for you to teach people who are already in the part of system. So you can show the few data points to them. See, we don't want traders in the system. We want investors in the system. So those who just do trade would show the data. That SEBI report where people who are trading in the F&O segment, out of 100, 88% people who are retail have made losses. You please show this data to them. Their eyes will be open, I'm telling you. You show how the long-term investing has helped people. you show various asset classes available before them. Just because trading will not serve the purpose of theirs, it will not make them achieve their life goals. So this is where your role becomes very important. And thankfully, if they are anyway aware of system, they'll be understanding things very easily. Yes, ma'am. So last one question, I will be happy to take. So somebody is asking to read what is the equity MF or index ETF. They are separate asset class altogether. They trade like an equity only in the stock exchange. So yeah, the underlying is SPV. Yeah. Over to you. I'm done with my presentation. Thank you very much, everybody. I hope
Yes,
I could.
the participants, if you have more queries, you can email to us info@ncfe.org.in. And
Thank you very much.
winding up the section, I request my colleague, Mr. Karthik Krishnan, Program Manager, to deliver the vote of thanks.
Good afternoon, all. Thank you, sir, for a very informative session on investments. As we are all witness to a great country being the fastest growing economy of the world, and as sir informed us that in our country, more than 1 lakh crore turnover daily is witnessed in the stock markets. And we are a country of 140 crore where more than 13 crore demat accounts are there and more than 16 crore mutual fund accounts are there. And therefore, the amount of that is flowing in the stock markets and mutual funds is very huge. And sir also gave us a very beautiful information that for the past 30 years, stock markets have delivered the highest returns among all the asset classes, in spite of the wars, in spite of the economic downturns, in spite of the natural calamities, or in spite of the pandemic. So as what sir meant to say, that you have to always be consistent investor and a long time investor. At the same time, as sir also emphasized on the role of SEBI of being a very prudent regulator of the markets. Sir also informed us like on various tax saving options such as ELSS and how ELSS contributes to increasing the corpus at the time of retirement. Additionally, he also gave us information on SIP, that is systematic investment plan, where a person can invest small amounts every month. And at the same time, he also gave us information on systematic withdrawal plan, where a person with a huge corpus can earn monthly income by investing in such plans. And additionally, of course, the fixed maturity plans. As sir also gave us information on that, we are a country with a huge gold reserves, physical gold reserves, and alternate to it is the government scheme, which is known as the sovereign gold bond scheme, which is also available in the demat form. Last but not the least, sir also gave us a very warning that 87%, there's a SEBI report which says that 87% of the people who invest in futures and options have faced losses. This is a warning signal for all of us, and sir emphasized that we should be investing and not trading. And sir also emphasized on the basics of personal finance, which we also in NCFE promote to the maximum, such as, first of all, is creating an emergency corpus. Secondly, is diversifying your investment and not putting all your investment in one class. Additionally, disciplined investing. And the main thing is not borrowing money from the banks or any other financial institutions just for investing purposes, and invest in small amounts, however small it may be, because the power of compounding is true in the later years to come. And tax saving. Tax saving is one of the important aspects of any personal finance. With this, I once again thank Sahil sir for his wonderful time. Yes, sir. Yes, sir.
Yeah, I want to make a statement to all the trainers. We have towing the idea of how to increase the financial inclusion in the country. Since you are the people who are working on the ground, I will be happy to hear your ideas. Since you are representing different parts of the country and different state, different locations, different mindset of people. So we want to understand from you what are the way, what SEBI should do to increase financial inclusion in your space, in your area, basically. In the country altogether also, especially in your area also. For example, Tamil Nadu has different style of investing, Kerala has different style of investing, Punjab has different style of investing. Since you are the people who are working the ground, I'll be happy to hear from you. Any idea you have what SEBI should do to increase financial inclusion? Please write to us. My email ID is sahil@sebi.gov.in. Please write to me. I'll be happy to hear from you. Thank you very much.
Sir, with your permission, I would like to make two announcements. Tomorrow's session, the capacity building webinar will be at 11 a.m. regular and will be done by the official from PFRDA. Additionally, as a part of Financial Literacy Week 2024, NCFE is organizing a financial literacy quiz for school students of classes 6 to 12th. And this quiz is bilingual and this is completely free of cost. So request all the trainers to market and promote this quiz on the social media channels, to their contacts in the schools to ensure maximum participation. मैं सभी ट्रेनर से सिर्फ अनुरोध करूंगा कि हमारा राष्ट्रीय सप्ताह वीक में एनसीएफई एक क्विज कर रही है जो स्कूली 6वीं कक्षा से लेकर 12वीं कक्षा के स्कूली बच्चों के लिए है और यह क्विज देश भर में है और ये निशुल्क है। तो इसलिए मैं सभी ट्रेनर से अनुरोध करूंगा कि इस क्विज को ज्यादा से ज्यादा प्रमोट करें और ज्यादा से ज्यादा स्कूली बच्चे इसका फायदा लें। थैंक यू सर, थैंक यू वंस अगेन ऑल द ट्रेनर्स, थैंक यू once again.
Thank you, Sahil ji.